One of the basic truth about the market is it is a chart that requires an indicator for you to actually function effectively. Now, you cannot actually come into the market and say you don't deal with charts or you don't deal with indicators. In this video, I'm going to be showing you a particular indicator that I use, which is a trend line. Okay, I use it for so many tools, as in so many functions in the market that actually shows me what to do or what price is actually doing. Okay, so let's dive right in. Now, the first indicator here is I use it in identifying breaks. Now, what do I mean by breaks? Now, when the market is moving, it actually moves in this format, whereby it creates a high, comes back down to retest. Now, this is a swing point. Okay, this actually goes up as a break. Now, what do we have here is a break of structure. So this trend line actually shows that break. Okay, so if you look closely very well on my chart, you will notice we have a break here. So this trend line tells me that there is a break of structure here. There's a break of structure here, so which indicates that price is still bullish. Now, whenever you see a break of structure, it simply means that we are still in a bullish move. Thereby, we are going to be waiting for price to retrace. Now, what happened? We got a retracement to the downside here to pull our entry to the upside. So one of the indicators, one of the tools that I use is trend line, and one of the function here is that I use it in identifying breaks. Okay, these breaks are actually everywhere on the chart. They're actually everywhere on the chart. So whenever I see a break, now let me just tell you, this is my first entry signal. Let's say I'm in a market and the market is actually doing something like this, doing something like this. Now, all of this happening here is not really my concern. My concern is actually here, because I want price to break out from this zone. Now, this is called an accumulation phase. Now, what's an accumulation phase? Accumulation phase simply means price is actually generating liquidity without moving in a particular direction. So a lot of folks are here selling, some folks are here buying. So what we do is we wait for price to take up this last high, and what do we see? We get a break. So this is the break of structure here. Now whenever I see this break, then I say, okay, it's time for me to get in. It's time for me to get in. So this is an indicator for me to know that a break of structure here is showing that price will definitely come back down before continuing this move to the upside. So as we can see here on the chart, what do we have here? We have another break. Okay, now somebody will be asking a question that price did not come to the zone. Now take note, price actually has its own way of moving. Okay, it didn't come back here doesn't mean it's not going to be coming back here in the future. It will. Like for the former video that I dropped, there's something called an inefficiency. Inefficiency actually tells me that price is actually affected. The market has actually been affected by smart money guys, and definitely they're going to be coming back for it. How do I know this? If you look very well, there's an imbalance here. Okay, I talked about this in the previous video. There's an imbalance here. Now, why am I confident about this? That price will come back here. This is a break of structure. So whenever there's a break of structure, it means price will definitely come back to retrace before going back to the upside. But in this scenario, it did not come back immediately, but it will definitely. Okay, it will definitely. So that's one of it. Then the next one that I look out for is a market indicator shift. It's a market structure shift. Now, how do I mean by that? Now, this is it. This is the high, right? Whenever price wants to shift from being bearish to bullish, it will give you an indicator, or indication rather. It simply means that the price will break out of the trend line. Okay, before going up. Now what's this? Price respected this trend line. It respected it. Now if you're following the SMER formula that I dropped about some time ago, you will notice that price, whenever it comes back here, we look for opportunity to sell. Okay, it keeps doing that. It keeps doing that until this break. Until this break. Now what does this break simply means? Whenever price break out of this trend line, it simply means that there's about to be a reversal. Now how do we know that? Whenever it breaks out of this trend line, it's going to be going to the downside. Now the next time it will be coming, this time around, it's going to be spiking up. Now what did the see price do? It went up and it came and rested here before going back. It came and respected the trend line, which was broken. Now some of the beginners traders are making this mistake that whenever price does something like this, so they immediately get a fake out in the 5 minutes or in the 1 minute to start buying up. You're going to be stopped out because the first break simply means that if you have actually been selling, you should look for a way to close a position and look for opportunities to start buying. Okay, that's the first indicator telling you that price was actually what, bearish. But after this break out from this trend line is the first indication that we should get out of the trade and look for opportunity to what, to get sell order. Now let's check the time frame that we're looking at this from. Okay, this is a 4 hours time frame. If we should go down to 15 minutes, okay, let's go down to 15 minutes and see what happened. Okay, and by the way, if this is your first time of watching our video or you actually been watching before but you haven't subscribed, would like you to subscribe to this channel, okay, for more content like this. We drop amazing videos like this that help you to stay profitable in the financial market. Okay, I think we have it here. Okay, so this was the first high. So I like to confirm price coming the second time on that same trend line before looking for my opportunity to sell. So this is it. It came to the trend line, so it was supposed to be selling down. Then the next time it was coming, it was actually coming to actually hit above it. See, now this was the fake out I was telling you about, that when price come here, see, it's rested on the trend line, right? It rested on the trend line, rested on the trend line. So what some folks will be doing is getting in here. I was among those kind of traders that used to jump into a trade after a breakout. See it here. So again up. Now if you look closely very well, you will notice something here. Let me take this back. There's something that happened here, and this was kind of like a break. Yeah, kind of like a break. Now I told you after a break of structure, price will retrace. Okay, now all of this here was a trend line. It was a trend line which indicates that price will definitely come back down. Let's get a trend line to see if we can fix it. Okay, now we have it. Now for some folks, like the market has two views most of the times. Some folks see a different setup. It's different setup, while others see another opportunity to get in. Look very well, you see something that happened here. Price was actually respecting this trend line. Okay, it is respecting this trend line. Now there was a break. This break now caused a retracement move for price to come to the upside before what reversing down. Now all of this was money. All of this was money. So the smart money guys knew that some folks will be buying. Okay, now guys, this is a takeaway from this video. Don't ever draw your trend line from the lower time frame. Notice I drew my trend line from the 4 hours. So okay, when I was coming back to the 15 minutes, I already knew that this was a retracement move. But if I open my chart and I just come onto the screen and I'm like 15 minutes, I want to do analysis, I'll be wrong because I wouldn't know what's happening in the higher time frame. And the higher time frame has a high probability win. It has a high probability win. That way you're able to stay profitable rather than risking your money on a setup you're not sure of. So the first thing that I do is I look out for trend line breaks. I look out for break of structure, sorry, BOS. So we got a break here. We got a break and price came back down, give us an opportunity to get in. But the second break that we got here, price did not come back to the downside. What does this tell us? It tells us that price will potentially come back down. There was something price did here. It did something that is called, resistance turning to support zone. Now, but we all know that resistance turning to support zone high, for me, it has a lower level of what I call possibility of playing out in the trade. Okay, it might fail, it might play out, but nevertheless it is more profitable to stick with the trend. Now, one of the advantage that made this trade to work out is because it is off the higher time frame. Okay, if it's off the lower time frame, it would have cost a high risk trade that would have cost to losses. So I'll see the trade I was telling you about that we drew our trend line in the 5 minutes. This was it here. So you notice it's very small compared to when we looked at it in the 15 minutes. It was actually large. That was because the 15 minutes take 15 minutes for each of these candles to be formed, while in this 4 hours it takes 4 hours for each candles to be formed. So it is better to do your analysis in the 4 hours rather than doing it in the 15 minutes, so you're able to stay profitable in it. Now, the second way that I look out for is I use it in spotting out liquidity. What is liquidity? Liquidity simply means where a pool of money is resting. I use my trend line in spotting out liquidity. Okay, now let's go back and show you something here. Okay, now this stuff here can equally become liquidity, but let me look for something simple to draw out from so it will be understandable. Okay, now take a look at this here. Let's draw a complete trend line so we can get the picture clearly and understand what's going on. Okay, that's fair enough. Okay, so what can we see here? Price respected here, respected here, respected here, and therefore we got a break. Remember the break that I told you about? Price is going to be spiking up out of the trend line before coming back down, and it actually went to the upside. Now, what does this mean? It simply means that this is a liquidity pool. Now, liquidity pool simply means where stop losses and pending orders are resting. Some persons are looking forward to having a breakout here. Okay, breakout here, and their stop loss will be here. Some persons are actually selling here, and their stop loss is here. Selling here, their stop loss is here. So there's money here. Okay, So I used the trend line majorly to spot out the first one that I said. I use it in spotting out a breakup structure. The second one, I use it in spotting out liquidity. Like we said, liquidity is where a pool of money is resting. Don't forget, this market is actually bullish, but some folks will be here selling, thinking the market is bearish. So in the lower time frame, if we go to the lower time frame, we'll discover that the candles are actually much, and they seem as if the price is actually bearish, and it is much, as the candles are much stronger in the lower time frame, whereas in the higher time frame they are smaller. Okay, now I like to base my analysis based off of the higher time frame, which give me what high win rate in my trading analysis. So I stay with this. Let's see if we can find it in 15 minutes. Guys, if you haven't subscribed to the channel, don't forget to do so. If you're actually getting any value from this video, don't forget to subscribe. Okay, this is it here. So as you can see, this is candles here. They're actually merged, and they seem to be merged, but in the 4 hours it is actually a liquidity pool, because the price broke out of this zone here. This was it here. It broke out of this zone here. Broke out of this zone here. I told you that when price wants to reverse, it will break out, then it came back down before it finally went up. This is a signal for you to close your positions if you're actually selling in this trade. But looking at it from the 4 hours time frame, it is actually a liquidity pool where stop losses are resting for price to take its move to the upside. So let's go back to the 4 hours. See, I'm combining between 4 hours and 15 minutes. Okay, because candles take longer hours to form in the higher time frame, and take lesser hours to form. It take more hours to form in the 4 hours, and it take less hours to form in about 15 minutes. Whichever way you are trading, you actually need to stay profitable with it. Now the last one that I look out for is market reversals. Now market reversals is when price is actually at a zone we want to reverse. It gives us an indicator that price wants to reverse before reversing. That is the first one that I said: breakup structure, market structure change indicator, and also reversals. Now this reversals kind of like shows us that the price was actually bearish, but it's going to be bullish. It's going to be bullish, so we should look for opportunity to get in. We should look for opportunity to get in. So let me just zoom this closely so you get the picture of what I'm doing here. Okay, now what can we see here? Now remember the first concept that I told you. I said price breaks out of this zone here, and the first thing we see is a breakup structure here. So what I like to point out is the first swing point that led to the move to the downside. The second one, it's really not my concern, but my last focus is this last one here. Now what am I pointing out? Two major points. Let me take out this 1 and 2. Now why am I pointing out 2? I'll show you why. Because if price should break above here in the future, it shows a breakup structure. Now if it breaks below here also, it equally shows a breakup structure. Why? Because here it shows that the market is bullish, and when it breaks up, it means we are still bullish. But if it comes here and come back somewhere here and breaks down again, it shows that we are going to be turning bearish. Okay, whichever way, you're going to be turning what? Bearish. But if it does something like this, it does something like this and come back here without breaking it but tapping into it and going back up, it shows that we are still bullish. So I like to take my trade here, having heard of the saying that when We buy when price is low and we sell when price is high. This is what it means. When price comes to the zone without breaking it, you should be looking for opportunity to sell. Then when it comes to the zone without breaking it, you should be looking for opportunity to buy. Because why? This is the last swing high and this is the last swing low. Okay, so I based my analysis on these two major swing points, which tells me what the price is doing. It tells me what I should be looking for. It tells me what I should be focused on, and it tells me what the market is likely to do what in the future. Now, as we can look closely here, we will see that we have three candles that are not touching each other. Now, this simply means that the price is going to be coming back here in the future to give us an entry here to take price up. Why? Because these three candles shows the fair value gap and inefficiency. Okay, now where is the fair value gap is here. Let's draw it so we get a clear understanding. This is the last point. Okay, now notice something before I draw up the next one. These candles here is the left side of the head, of the shoulder rather, of the shoulder. This is the head. Now we are waiting for the right side of the shoulder to come up, which is going to be happening in the future. Okay, this is gold, GU, Great British Pounds, USD. So this is the left side, this is the head. You're waiting for the right side to be formed before getting in. Okay, this is going to be our confirmation before we get into the trade. That is one. This was a change of character. Price did not come back to it. It doesn't mean it will not, but it will in the future. Okay, so this is coming back to the trend line. Like I said, this is the first thing that I look out for, the last swing point. So if price should break below here, it simply means we have changed direction of market move. Okay, so this is the trend line that I drew. I see the last one is reversal two. Now what did price do? It came here. Now this is a very dangerous pattern of trading. I don't like trading it. It's called breakouts. Okay, mostly if the reason why this trade plays out is because ah okay, this is fair enough. We got a break. Okay, we got a break of structure and price came back to that particular last order block that led to the move up. Okay, which shows that we are still bullish. Now it's kind of like cool, but for me, I really am not comfortable with trading it. The reason is because it doesn't work for me. I know what trading is. Whatever works for you, stick with it. I actually don't like this breakout trading pattern. Okay, but if it works for you, it's fine. But for me, I don't trade it. It's actually a concept I've been trading when I newly started trading. I used to trade it, but I stopped it because of my experience with it. So this was it. Price coming back to the trend line, coming here. So to take price to the upside. Okay, guys, that will be all for this video. If you like any comments, please have any question, don't forget to subscribe to our channel and get across to us. Thank you.